All right, everybody, welcome to the Gilder Spotlight podcast. Today we have a very special guest. His name's Andrew Ackerman. He is a 2Exit founder and also the author of the Entrepreneurial Odyssey. But Andrew, if you can give our guests a quick introduction to yourself, that'd be fantastic.
Sure. I've been working on doing a quick introduction for years. I'm not very good at it. The short version is two startups. In between them, I worked at a family office, which if you don't know what a family office is, you basically just work for a rich old person, maybe their entire family. It depends. I did that for 3 years. I had done some consulting beforehand for Fortune 100 companies. And since then, for almost 20 years, I've been investing in startups, first as an angel, then running accelerator programs, and now running other types of platforms. And again, as an angel.
Wow. That's an extensive career, very focused on startups, entrepreneurship. Perfect guest to be on the Spotlight podcast, where most of our listeners are founders, entrepreneurs, and executives. But Andrew, I kind of want to start with the beginning when you were younger, kind of back in the day. Let's say you're, in your early 20s. How did you start your career? What what did you study in university in order to get to where you started your career? And then when did you
Sure.
jump in entrepreneurship?
Yeah. So my career is a little bit helter skelter and kind of only makes sense in retrospect. So I did, you know, I had a grandfather, actually, both my grandfathers were entrepreneurs, small business entrepreneurs. My mom's dad did everything from Zippo lighters and humidors all the way up to like insurance products. My dad's dad had candy shops, candies and magazine shops. He'd go into like an edgy neighborhood, build it up, sell it, move to another edgy neighborhood. My dad, though, was a doctor. Like everyone wants their children to have a more stable career than theirs. So, it wasn't my dad's life at all. But I knew I wanted to be something of an entrepreneur. I just didn't know what that meant. So undergrad, I did poli-sci and economics, like both. There was no business degree. I figured econ was good. Then I went to business school, Chicago Booth, but this is still the 90s. So there's no such thing as studying entrepreneurship. If you're an entrepreneur, you are unemployed. That's it, right? That's what people knew that to mean. There was one guy in my entire class of 600 people that went to VC, maybe two, but I think just one. That was Ben. Nobody had any idea what Ben did. And that's the irony now. Ben and I are still friends, and now I know very well what he does because I do it too. But that's how it was coming out. So coming out in 1995 from a top tier business school, it's like, hey, Andrew, the door on the right's iBanking, and the door on the left is consulting. If you're here for marketing, dude, you chose the wrong business school. So I'm like, I don't want to be an iBanker. Let's go into consulting for a couple of years. And then finally, around 1999, I'm on this project in London, of all places. It's a pre-merger between these two large companies, and nobody wants to be on that team because if the merger doesn't go through, they're contaminated because they know the other company's financials. That's like a very risky move career-wise. So we were called in and we built this intranet application where everyone could upload their numbers, headcount, financial numbers, and we would behind the scenes kind of merge it into a pro forma, and then no one would be contaminated. And I remember seeing this thinking, this is cool. This is what I wanted to do. It just didn't exist 4 years ago. And that's how I ended up on the startup journey.
And just curious, why didn't you do consulting after? I know you did, poli-sci and economics, but a lot of folks jump into consulting too after their undergrad. Why did you feel compelled to get your MBA if you know that it's just
In part because I could, in part because I didn't know any better, right? Even now, you ask me like decades later, was it smart to go straight through or should I have taken a couple of years? On the numbers, it was smart, right? First of all, I got into Chicago Booth before it was even called Booth, right? I mean, like, do you say no to that? Like, that's kind of an intelligence test. And it's also thematically like the kind of school I really liked. So, like, it was a good fit, awesome name, very cold, but I could live with that. Maybe when we're done with the podcast, there's an absolutely obscene joke that starts that way, but maybe not for the podcast. Um, what would I have done? I'd have worked for like an Arthur Anderson, or I guess Anderson Consultant at the time, doing the same thing I did 2 years later for half the pay. So worked out okay. Now, on the more subtle things, like how well I managed my career after that, how well I developed mentors, like arguably I could have done that better. Now, would I have picked that up by spending a year or two prior before going to business school? I don't know. So it's really like a your mileage may vary question.
And because I know a lot of people go to get their MBA for the networking experience and to build,
Hmm.
future connections where I'm assuming that you probably met a lot of folks at Booth that you're
Yeah.
probably doing business with today.
Yeah, in a way, yes, and in a way, not. I don't know. Such a VC. Everything is it depends. Um, in a way, yes. In a way, no. I'm in touch with a good number of them, but not as many as I would have been in touch with if I were in investment banking or if I were, still in consulting or if I was working in a certain industry. Like those are deep and established industries. Until fairly recently, in the past 5 or 10 years, the schools didn't actually have an entrepreneurship program. They didn't actually have a venture program. And that's all changed lately. And these are people that are now like, 10 plus years younger than me. So I see them all the time, but they didn't go to school with me. And in a weird sort of way, it's come full circle because now I actually teach entrepreneurship as an adjunct. So like, I'm part of teaching the thing that didn't exist when I was in school.
Why do you think entrepreneurship is so much more prevalent today than it was 10, 15, 20 years ago?
So that's actually a really great question. I mean, the shallow, but also probably the real answer is oh my God, people made money in such dramatic ways. We're very it's very fashionable to be like, oh, we live in a horrible world, things are falling apart. How much better things were before. I guess, pardon my language, bullshit, right? Would you ever choose to live in an era before air conditioning? How about before antibiotics? How about before toilet paper? No way. Right, I grew up in the '80s, we were worried that the Soviets were gonna nuke us till we glowed and then shoot us in the dark, right? As complicated as the world is today, it's still better, and the number of people who live in poverty have gone down dramatically over decades. For as much as, like, nothing's perfect out there and, like, you can be up at night, like, things are okay. And in the startup scene, even more so. I mean, the rise of companies like Google and Facebook, like all of a sudden, like being an entrepreneur doesn't mean just opening up a dry cleaner somewhere. You can, but tech entrepreneurship got big. And a lot of those people donated money to schools as well. So I think, as people started coming into business school, they're like, well, I want to do this startup thing, but I don't really know what to do. Well, you're in school, you should learn it. So it's up to the schools to find a way to teach it, which is in many ways easier said than done. But I think that's why it grew as a subject, just totally from demand from people who are seeing, people just a couple of years ahead of them making obscene amounts of money by doing everything right
And
or
it's a
getting very lucky.
right. It's amazing where all these, I mean, even, you know, 20, 30 years ago, all the biggest companies in the world were energy, oil, uh, gas, petroleum
Hmm.
companies. Now they're all technology companies, all the trillion-dollar companies. Uh, Nowadays are, Apple, Google, Amazon, Meta, Microsoft, and all of them, formed years later. So they were able to become billion-dollar companies,
Hmm.
even trillion-dollar companies within a span of about 20 years. So
I
it's
have this one
incredible.
chart that I show my entrepreneurship class in the very beginning, like why we care about it. And it's a chart of the average length of time a company has spent on the Fortune 500 list. And like all through time until about 20 years ago, they were all like tons of time. Once you're on that list, you stay there. And all of a sudden it drops off a cliff because of that changeover. Like old companies got pushed out by new companies that have joined the list. I mean, it's really cool times to be alive.
Well, going back to, your first step in entrepreneurship, what was your first business and why did you start it? Was it that telecom kind of data one that you were mentioning earlier?
No, no. Um, First business was summer camp related of all things. So, I once I was done with that project, I'm like, this is what I want to do. It ain't happening in Chicago where I was living at the time. So I moved back to New York. I'm like, I got to get out of, I'm going to be a consultant. I got to get into the startup world, I got to really understand like a little bit more about the tech side. So I took a job at Kaplan Test Prep, moving what was then products that were either sit down in your chair in a room for $2,000, or here's a CD-ROM for $35. And they want to figure out like, what can we do with this whole interwebs thing? And maybe for, oh, $400, we'll see. So my first job was like creating a web native version of like a GMAT course. What did that mean? And it was great because like no one else knew what they were doing either. But I was surrounded by people who were pretty sharp. And I was out in New York, so I could talk to people who were doing a lot of different things. And we started moving the products on. And somewhere between doing that and getting to my first anniversary there, which I never did quite make, I got hooked up with a friend's brother from business school, good friend of mine from Chicago, Booth. We'd sit down, we'd have drinks, we'd talk about like the dumb.com ideas people were pitching us. And he starts telling me about this idea to create like not just websites for summer camps, but like password protected photo galleries and like, e-commerce sites so you could buy all your supplies for camp. And I'm thinking about it, I'm like, I can't think of anything obviously wrong with it. I'm like, give me a couple of days. I'll figure out why it's dumb. And he goes, well, take another day or two. My brother's starting a company this week. So, if you can think of anything that's wrong with it, tell him now. So I call Eric back. I'm like, Eric, man, that's a good idea. Wish David luck. He goes, I can do more than that. They're looking for a third co-founder. You would be great. Why don't you talk to him?
Sounds serendipitous. That's and then how did that summer camp kind of photo? It sounds like it'd be kind of a Dropbox type of solution
A
nowadays.
little bit. So it's Bunk One was the name of the company. It's still around today. The tricky part, now put yourself back in 1999, 2000. Shutterfly is out there like charging $4 for a 4x6 photo. There's a couple other guys out there, but not that many. It's still kind of hard to do. And the tricky part was if you, Tiger, were, I don't know, camp director, your biggest thing is the parents want to see photos, but like, I don't want some dirty old guy sitting in a room somewhere, like doing stuff to himself to like photos of kids at the pool. So how do you kick that person out without changing the password for the entire camp and kicking everyone else out? So it was technically difficult at that point in time to have individual level accounts with different levels of administration so that people could be kicked out and in. And then wiring that in, we were one of the first people I think to ever use Shutterfly as a plugin, as an API. The word API didn't really exist back then. There was no GitHub. So we were doing all that kind of stuff. And we did a one-way email system called Bunk Notes, which was basically a web form that we charged $1 for. When it got printed out and sorted at camp. But these are tough things to do back then. I mean,
Mhm.
that's the thing, right? At any one point in time, there are things that are hard, that are painful, that are frequently painful, and that are widespread. If you're solving something that's all three of those things, that's awesome. And if you look back in 5 or 10 years, and I'm like, man, that was kind of basic by today's standards. That's because you solved it.
Mhm. Yeah, I think I mean, for example, I mean, Bezos basically changed the way how people shop, and Google changed the way how people search for things and find information on just in general. So it sounds like you guys ultimately changed the way how people can connect after through summer camps and through information and um, with the administration, with the parents, and everything like that. The first business that my family actually hopped into was in the early '90s. They would send Japanese students to America uh, and give them an American experience. They actually had like summer programs, like
Hmm.
actual summer camps. And it was kind of an interesting thing talking to my dad about it because he said Japan at that time, it was kind of at the end of the bubble time, like end of the '80s. And so people were driving around Mercedes and BMWs in university because there's just so much money flowing around in Japan. And so paying $3,000 or $4,000 for a 2 week summer camp in the States was very affordable. And so my family would send 50, 60 students every single summer to Montana and give them that Japan or that Montana American lifestyle, teach them English, and then send them back and
You
help them
you
get a
you
place to
you
live.
want to know
So
how well I remember that era?
you were in university at
Gaikuin wa wakaimasu.
that
I took Japanese
Yeah.
in business
Yeah,
school because I thought at that point, like,
yeah,
you needed to know that for business going forward.
right. right? Wasn't yeah, Japan was kind of the I mean, all the biggest companies in the world at that time,
Yeah.
or technology companies at that time were in
I
Japan.
mean, Sony was
Uh,
the king
Google.
back then.
Yeah.
Yeah.
But, yeah, so going back to your career, so how long did you do, it's called One Bite or
So
Bite
bunk one. I did
Bunk
bunk
One?
one,
Okay.
as in like cabin camp bunk. So I
Mhm.
did bunk one for 8 years. I got bought out at that point. Company kept going. The CEO didn't want to sell yet, so we worked something out where he bought me out. Company sold a couple of years after that to a private equity fund, and it's still going strong. But I've been out for many, many years.
So and if you could describe, 'cause we have a lot of entrepreneurs, a lot of founders, C-suite folks. What is the process of being bought out, and how do you negotiate the terms? How does all that work?
Okay, so my experience is super atypical. Super atypical. Fully, it's part of an acquisition. So usually you get to come to a point, there's a company out there that's interested. Either you get an unsolicited approach from somebody, could be a competitor that wants to buy you out, could be a private equity fund that wants to do a rollout, or you can retain a banker and say, so I want to shop the company around now, which is what we did. We got a great banker, came up, we thought we had like, 20 or maybe 12 to 20 companies that would be decent potential purchasers. He came up close to 100. Give you an example of how creative he was. He's like, listen, these bunk notes that you send that parents can send to their kids in camp and they're printing out, they're kind of like greeting cards. So let's pitch it to American Greetings, like, which was brilliant. And they didn't ultimately want it, but that's fine. The whole idea of an iBanker is to come up with dozens of potential acquirers and to run a process to get the best offer to fall out at the bottom of that process. And at the end, we had a financial offer that was not a strategic offer, but we were interested in buying it. The offer was good, I thought. Wasn't as good as the CEO wanted. At this point, I've been there a little over 6 years. So I went up to the CEO. I said, listen, Ari, you don't want to take the offer, that's fine, right? You're the boss. But if that's too little money for you to take, then you should be totally happy to buy me out at that price. And I said, well, listen, I'll stay on long enough to transition a new team member into place to take over my role. So we structured it as a buyout, and it was very amicable at the end of the day. But this is unusual. Like, if you're not the CEO and you're not the one with the majority of the shares in your back pocket, one way or the other, then you're usually along for the ride. And if you leave, you may have those shares if they're vested. You may lose those shares if they're not, but you really can't control your exit. Now, I got lucky in that the way it played out, we were able to negotiate something amicable.
And so what was your path after that?
Meandering. No, so I went from Bunk One, from my first startup, and this is where I went to the family office. And the family office was at this point just one older gentleman, originally European. To give you an idea, it's like born in the south of Italy, raised in the north of Italy, raised in the south of France, then now lived in Switzerland, where he could negotiate a flat tax with the Swiss government. So it's like that level of wealth. He had a small island in off the coast of Panama that was his little pleasure dome, and he also had a what is for the family office world a relatively small portfolio of hedge funds, private equity funds. I mean, it was still big enough to warrant having a full-time investment professional, but not a team of professionals. And he also wanted to incubate some ideas that he had, for his own ventures. He's like, well, I'm only going to hire one person. So I could hire somebody with an iBanking background or finance background, and then they figure out the entrepreneurship side, or I can hire someone who's got a good startup under his belt and also has a decent background in finance, and to kind of teach him how I want him to look at my hedge funds, look at my private equity funds, my VC funds. And of the two, like, the second is a smarter move, right? Because it's a lot harder if you've never done a startup to understand what it means to like do a startup. And since I'd gone to Chicago Booth, he was comfortable that like I had a decent foundation in finance. So I got in there. We had about 80 ideas. I'm not exaggerating, of which 4 or 5 weren't bad. And they were all tech startups. One was like a very special type of honey that wasn't being imported. One was a fashion line. One was a beverage with this kind of, I mean, I call it pond scum. It's called spirulina, but it's actually well known if you're into the health club, the health food stores and the specialty stores. So,
Certainly
so
not.
we worked on a bunch of them. And what I didn't realize was we were actually a proto venture studio. I mean, now I deal with a lot of venture studios, but at the time I had no idea what it was. So that's what I did for a couple of years. It was a difficult job, though, in many ways. So when I had the opportunity to do my second startup, I was ready.
And at that time, what were kind of the biggest, I mean, innovations or most popular type of startups? Was it mostly .com startups, or was it pretty
Yeah,
common to
it
have,
was still it was still
private
very
startups?
much .com starter. So to give you a sense, I came in the very beginning of 2009. So if you remember, like the world had started to implode in 2008. All the hedge funds were underwater. All the private equity funds, great, we're calling capital now because like this is the time to buy. And he's like, that's great, but no one has any money to give you. So I learned over that first year, I learned a lot that I'll never necessarily use again in my life. Like, if you're a limited partner in a private equity fund, you can actually sell that LP interest. I know that. It's not a public market. It's like one of these private markets where like you got to know people who know people who know people, but it's doable. It was really interesting. In a I'll never do that again sort of way. We also started getting in direct into a lot of the pre-IPO startups, which at the time was difficult. Uh, yeah, I'm out. That's too long a story, but we got into Facebook at the equivalent of a buck 35 a share. I was able to find someone who had left. He was one of the early founding team, not co-founder level, but there, and he was ready to leave, and he had, about $1 million or $500,000 worth of shares that he was willing to part with. So we bought it.
That's that's incredible.
Yeah.
How did you have the confidence that you knew Facebook was, had the infrastructure and the future, not because a lot of the social media
Mhm.
companies like MySpace and quite a few others ended up just going out of business. And
Yeah, MySpace was like a train wreck. So I'll tell you, so I actually had a little bit of confidence with Facebook from before. So when I was at, and I'd actually had a MySpace account um, ages and ages ago because you couldn't get a Facebook account initially unless you were in one of the schools they worked with. So here I am, I'm running Bunk One, and since it's a seasonal business, like kids go to camp in the summer and you need more support for the parents. We hired up about 20 college students every summer. We trained them up. I was a COO, so I trained them up into how to answer the calls, how to answer the emails. And I noticed that once we were past like the biggest hump, anytime they had downtime, they were on Facebook. And I remember thinking, this is interesting. They're going to cut MySpace off at the knees because they made it. It's like the cooler kids got on Facebook. The people who couldn't get on yet wanted to. So they worked their way up from there. So fast forward a couple of years to when I had the opportunity to get the stock, Microsoft had just invested in the ungodly valuation of $15 billion. And people were like,
then just like
oh
a
my
fifty
God, like
billion
Microsoft's like dumb, right? How could they do that? And I remember looking at it and like the pages were super clean. And like in talking to people, I'm like, yeah, if they just wanted to put as many, even half as many ads as MySpace had, they could triple their revenue right there, which would put them into cash flow positive, just like that. So I'm like, okay, there's downside protection here. The idea that the company was totally going to implode wasn't really, maybe I got lucky there, but it wasn't really considered a possibility, unlike what happened to MySpace or before at Friendster. But it seemed like a pretty good downside protection, and it seemed like plenty of upside.
And another question, going back to, 2008, 2009, did you started your next business in 2009, or that was
So
actually after
no,
your
it was
business?
in early 2011, late 2012 was when I left my second startup.
The kind of the question that I was going to ask is, I think, after, a major recession like 2008, even 2020, I noticed and moreover 2020, but I did hear in 2008, it did seem like there's a huge boom in entrepreneurship after a crazy economic recession like in 2008 and 2020. I I've just noticed those particular trends,
So there's
like
not a boom
2011,
by the
Uber.
numbers,
Yeah.
but the startups that are founded during downturns and certainly in that first quarter when it's coming up do the best overall. And there's good reasons for that. So um, the dumb money is gone, right? If people are like, oh, I'm just investing here, it's great. I can tell great stories at cocktails. Like they're out, like their public portfolio is down 30%. So they're not so, quick to spend the money. The entrepreneurs who are like, oh, I'm going to quit my corporate job. I'm going to make billions of dollars. Like, yeah, I'm not leaving my day job so quickly. So the people who are in the game at this point are the really good founders. They're the investors who really know what they're doing, and they face less competition because the other guys are gone. So you can get better investments, and you can make more progress as a founder. You can hire better people if you have that money because there's no one else trying to steal your programmers away. So it's really an awesome time to be an entrepreneur if you have the resources and the guts. And maybe if you're in the right portion of your life where, you're not maintaining 3 kids in private school, it's just you. And worst case scenario, you still have your room at home and your parents will be happy to have you back. Now, I'm joking a little bit because if you're that early in your career, you probably don't have the life experience for it. But single, or you're married, no kids, your spouse has a steady job, like if you can become a founder during a downturn, like that backstop, that's a great time to do it.
And what would you recommend the first maybe steps that a founder should take before starting a business?
Well, obviously read my book. You thought you were
Okay.
gonna
Yeah,
get
actually,
you thought you were gonna
let's kind
get
of
past
segue
this
into the
without a
book, the
blatant act
Entrepreneurial
of
Odyssey.
self-promotion?
Yeah,
No.
yeah.
So let me generalize that, and then I'll explain why I wrote the book and why that's actually the right answer. But let me do it in a less abrupt way, right? So we all know people who are lawyers. And of all the professions out there, the most people in a profession who are unhappy with what they do, in my experience, are lawyers. And the reason for it is that being a lawyer is utterly different than what they think it is. You go to law school is cool, and then you go into the law firm and like, this is mind-numbingly horrible. Now, okay, they were excited about the idea of being a lawyer, but not about the daily tasks that they would actually have to do as a lawyer. So if you are in a day job somewhere in an industry and you're seeing pain points, you're like, I can solve these pain points, right? And hey, it's not just me. Everyone has these problems. I can tell. And they're painful and they're frequent. I want to make a startup to do this. Then what you can do to gut check whether or not this is the life for you is get as close to the startup world as possible and see what the day-to-day is. Not the idea, "Oh, I'm going to be this Mark Zuckerberg biopic idea of what being a founder is, or, Steve Jobs. That's like the idea of being a founder. But to understand really what a founder does every day, but not the glamorous stuff, and what it looks like to see your bank account, drop a little bit every month. Like if you can internalize that feeling and then decide that you're okay with that. You can do that. That's what you want to do before you take the jump. And then all of a sudden you're like, oh my God, I can't do this. It isn't for me. So that's actually the reason I wrote my book the way I wrote it. So the book, it's called The Entrepreneur's Odyssey. It's written like a novel. It's not a how-to guide. It's not that boring business plan PowerPoint that's kind of stretched into 200 pages. It's written like a novel because, in addition to getting across what you actually have to do as a founder in a memorable and more interesting way, it gives you that feeling for what the day to day of actually being a startup founder is. It lets you like taste what that's like. The same way, if you were going to be a lawyer, I'd say, take a, don't go to law school yet. Take a year off and be a paralegal, right? Live it. And if you're early enough in your career, quit your job and work for a startup. I mean, get the job for the startup first and then quit it. But like, work for a startup, see what that life is like when somebody else is, responsible for making sure they make payroll. And then you can decide if like that's the right job for you.
100%. I couldn't agree more with everything that you just said when you're, consistently running through pain points, whether it's, you're doing your legal job or your corporate
Mhm.
career, and you have that solution. And also I do agree that you have to have the well, just faith in yourself that, money draining for a couple years is going to be worth it in the long term. And I think, what are kind of some practices that you do in order to stay resilient being a founder? Because you're a multi-time founder, you've had multiple exits, obviously you've had a lot of successes, but has there ever been a time also that you've hit maybe some speed bumps, and how do you
Oh,
stay resilient?
all the times. When I was on my way out of Bunk 1, um, I got kinda lucky that I landed where I did, right? Had I left a little earlier, or had been purposeful about it, maybe I would've gone into VC instead earlier in my career, and I'd have been a very different type of investor. But the reason it didn't happen that way was I was so heads down in making the startup work, I neglected to take the time out to build my network and to build my personal brand and to get out there. And I'd done something that was right. My first article that was ever published was about interchange plus credit card processing. It was an Inc. magazine in like 2005, 2006. And I just kind of lucked into it. I could have built on top of that and built more of a name for myself. And then when I was ready to come out, I'd have had, that running start. I've had inbound opportunities. But I was like, "Nah, man, I just like, there's so much work to do. I gotta keep my head down. I gotta get this done." And that was a mistake. It's difficult to set aside time for that, but I've learned I have to do that. And, over the years, I've done it a little better, but, it was definitely one of the early mistakes I made in my career.
I know that we only have a couple minutes left, and I have two more quick questions. One is, I know you're an investor. What is your thesis? What kind of startups do you look for, um, when you're writing checks?
Good ones. Okay, the slightly longer answer, very good ones. Specifically, I've done everything over my career. I was a total generalist when I started. And I started focused by industry. I've done ed tech, but for the last, and I know health tech pretty well, but for the last 7 or 8 years, I've been focused on prop tech and construction tech. So startups that service real estate developers, property managers, architects, real estate agents, construction companies, subcontractors. That's the space I've been playing in, and I usually play in the post-revenue pre-Series A space.
Got it. Got it. So anyone pre-seed, seed. And then why, just quickly, why prop tech and construction?
So the short answer is it's just a fantastic opportunity. It's the sector, the actual underlying sector is maybe the second largest sector in the world after fintech. Sorry, financial services. And yet the number of startups playing in the space are woefully under-indexed, especially on the construction side. And there's been reasons for it. It's been harder to get tech adopted in the space. Any building that's built, it's not just one person. It's not like I own the factory, I employ everyone. It's like I'm the developer. I hired an architect. The architect's paid by the hour, not by how quickly he finishes the project. The contractor is also time and materials. 80% of the people that work for the contractor aren't actually employees. They work for subcontractors, right? It's really, really hard to get technology adopted across such a fragmented ecosystem. So it's taken time, but it's getting there now. Right. So it's I've seen the space grow by leaps and bounds in just a couple of years. So it's a really exciting time to be in this sector.
Good to know. And then one last thing, Andrew, any words of wisdom or advice you'd like to share to our founder community?
Oh, so tempted to say buy the book, but I'll come up with something else. If you bona fide love what you're doing, you're never going to work a day in your life. So really, really, really focus on understanding what it means to be a startup founder, what role you have within the startup. Understand it and make sure it's something that you love because you're going to be doing it for a long time. It's going to be lonely at times. It's going to be hard at times. It's going to be scary at times. So make sure you love what you do.
Awesome. Andrew, I really appreciate it. Everybody listening, we will have Andrew Ackerman's uh, Entrepreneurial Odyssey in the show notes. So it'll be available for everybody. And we'll also share a lot more information and stuff, like your, LinkedIn and
Certainly. Thank
potential
you.
ways to contact you in the show notes. But Andrew, really appreciate your time and thank you for being a fantastic guest on the Killer Spotlight podcast.
Thank you for having me.